Okay, we're watching every tick by tick of this market. The Dow now down just over 200 points. So this is a wild session. We're bringing in our Fed Day panelists, Nuveen's chief investment strategist, Brian Nick, with $1.2 trillion in assets under management, and senior writer for the Wall Street Journal, Jon Hilsenrath, joining us from Washington. Jon, I'm going to begin with you. Okay. I don't know what to think here, because we started to see a very positive reaction in the markets. Now you see a complete turnaround here. And what was it? Are we right that it was spooking investors on inflation or something else?
Well, so let me say a couple of things, Liz. One is I'm really glad you and your producers put up that volatility index, because I think that's really the story that comes out of this press conference is market volatility. When you put together everything that Jay Powell said, he said, look, this recovery is not going to look anything. It hasn't looked anything like the recovery last time around. Therefore, the plan that they had last time around after the 08-09 crisis has to be torn up and thrown out. The last crisis, they came out, they raised rates very gradually. They took a long time to do it. They had a very slow unwind of the balance sheet. He says they're tearing that up, and they're going to be having discussions meeting by meeting. So the Fed is uncertain about how this is going to play out in terms of how fast they're going to have to raise interest rates, how far they're going to have to raise interest rates, and what they're going to have to do to the balance sheet. And there it is, the volatility index. And because of the Fed's uncertainty, I think the market is digesting that. It's uncertain. And I think that the watchword we're going to have for the year 2022 is going to be volatility, which really isn't great news for market values. If I could say one other thing, so that's all kind of what does this mean for Wall Street. In terms of what does this mean for Main Street, I think the good news is that the expansion is still going. Unemployment is very low. Hopefully, if they get these supply chain issues worked out, inflation gets under control, and this isn't a terrible year for households. I think it's going to be a volatile year for the market, and that's what Jay Powell triggered today.
Brian, John's absolutely right. I mean, now you look at the NASDAQ, it's up 20 points. So we are all over the map. Little bit of a comeback here, at least an attempt to. What did you glean from an investor standpoint? Because that's what you do. Chief investment strategy over at Nuveen. What did you glean that matters most to the investor, and where do they go from here?
Yeah, I think investors came into this meeting expecting the Fed was going to hike 4 times in 2022. And I think they probably came away from that press conference thinking it was a better chance of more than 4 than fewer than 4, based on what Powell said about supply chain issues lingering for longer and perhaps the employment situation being already much tighter than they would have expected. So what you've seen the market do is price in part of a 5th rate hike. And remember, back in September, the Fed was fighting whether it was going to be 0 or 1. So we've done a hairpin turn on rate hikes. We're heading into, I think, the hiking cycle now. And now the uncertainty is about how quickly the Fed's going to go, not whether it's going to go at all. March looks like a done deal based on this meeting. But if they have to go every meeting instead of every other meeting, that's an adjustment and something that the Fed has not really communicated before and something that has not been priced into equity or credit or bond markets so far. So that's the adjustment I think we saw during that press conference.
Okay, can I just push back a little bit on that? I think this was a tale of 2 press conferences. In the beginning, he went on and on saying that the labor market's so strong and that the economy is looking remarkable. And then when pushed about interest rates, and we did clip this bite. I don't know if we have that interest rate bite ready, but in essence, well, let you hear exactly what Jay Powell said, which then threw us into a little bit of a land of confusion. Listen.
We'll be asking this question all year long, and that will be, are things turning out as we expect? There's a case that, for whatever reason, the economy slows more and inflation slows more than expected. We'll react to that. If instead we see inflation at a higher level or a more persistent level, then we'll react to that. And again, we're well aware that this is a different economy than existed during the last tightening cycle, and our policy is going to reflect those differences.
Brian, I don't know. When I hear that, I think he's leaving the door open to stand pat in March if something happens.
I think at this point, they probably need to get on with the hike in March. The question is, what do they signal about the future? They'll have an opportunity through the dot plot at that meeting, through different changes to inflation and unemployment forecasts, to signal to the market just how fast it thinks it needs to go. I think that one of the things that is really concerning the Fed right now is that a lot of these things are really beyond their control. I mean, they can't control the price of used cars based on a shortage of semiconductors that's spilling down into that market. They can't control whether people feel safe enough from the virus to go out and go back into the labor force. And that's one of the things that I think is causing them to think they have to hike, because the labor force might just be smaller than it was before COVID-19.
Jon, I don't pretend it's easy to wear the Fed's shoes, but you got to tell me, at what point does inflation get so bad that they rip off the Band-Aid? Don't we need to see that? I'm looking at all kinds of metrics. Heating oil at a 7-year high. Palladium, which is the metal that helps catalytic converters convert, soaring to a 4-month high. Platinum, 9-week high. As we said, dollar index, 3-week high. You're now looking at some of the auto loan companies, and they're moving higher because they know that this is a possibility where we'd see interest rate hikes. But Brent oil above $90 a barrel.
Yeah.
First time since 2014 we saw that.
Liz, I think you're right. And the thing about the Fed is it's a very glacially moving institution. And so in their world, they actually are ripping off the Band-Aid. You know, by moving, I think Brian is absolutely right. They're going to be raising interest rates in March. And I think he's also right that there's a lot that the Fed can't control. When you think about inflation, prices, it's a result of supply and a result of demand. The Fed can affect demand by raising interest rates. It can't really drive supply. And there's so many supply issues right now with the supply chain problems, materials coming out of China, people coming back into the labor force. So they're watching the supply side of this economy and just hoping it goes their way. If it doesn't go their way, they're going to have to do a lot more work on the demand side, and it could be a tough year for the economy. If it goes their way, they don't have to raise interest rates too much. Again, I'm going to come back to this uncertainty question. And that clip that you played showed it again with Jay Powell saying, you know, the last expansion was slow and predictable, and they built a policy around that. They don't know how this is going to play out, and the market today reflects that uncertainty. That's why the VIX went over 30. I think it's going to be over 30 a lot this year. One other thing I would just point out, the whole question of, you mentioned they have a balance sheet that's over $8 trillion. You know, Powell said this a few times. They haven't figured out what they're going to do with that. He kind of hinted at the end, within a couple of meetings, they're going to start unwinding that too. But they're still talking about that. That's another uncertainty. You know, if I was an investor, and I'm not, I would be buying volatility right now.
Yeah, you're right. I mean, we're looking at volatility climbing. The VIX now up 2.5% after having been down around 10% earlier today. Brian, Jon Hilsenrath, thank you very much.